know about inflation. It's hitting everything from gas to groceries, right? Matt Landon, a certified financial planner and CEO at Senmax Financial Group, is with us. So we are all feeling it in one place or another, or all of the places. But I'm imagining that retirees living on just retirement income are feeling it a little bit differently.
Correct. One of the big things with retirees is they oftentimes are on more of a fixed income. So when your income's coming from Social Security, pensions, things of that nature, there's a little less flexibility around inflation, and so that's why it's important to have more diversified opportunities for those investments. I think it's really key to have multiple income streams as well because of these types of situations. What we're seeing going on in Iran, this is really affecting oil prices, but it's affecting gas prices, and it's going to trickle down. And we're seeing these headline numbers, but the bigger concern for retirees that I'm really worried about is the prolonged effect. Have they built in inflation for the next 10, 15, 20 years?
And the answer is probably no. So if they're at home and their answer is no, what should they be doing?
Well, I would say one of the things to start with is putting together a comprehensive plan, a retirement plan, and then looking at your different buckets of money. And remember, not all dollars are taxed the same. So when we think about inflation, what we're talking about is the erosion of the purchasing power of your money. Beyond that, you also want to think about the different taxability of these dollars, and keep in mind that one account is going to be taxed higher than another account. So when we look at inflation, you want to look at the cost of things, but you also want to look at how many dollars do I have in my pocket as well.
Okay, and I think that probably makes people go, that sounds really complicated, which is why they kind of need some help to be able to figure that out.
Yeah, it can be. I would just start off by saying this. There's three main types of money. And it's not yours, mine, and the viewer here. It's taxable, some tax, and no tax. Which one of those is your favorite?
Oh, no tax.
Absolutely. So I think while we're in these situations with the stock market doing what it's doing today and this current situation we're facing, look for those opportunities to try and adjust your taxability, but also what are we doing to address that inflation concern down the road? And keep in mind, we're investing for a long time, not just for the immediate.
Okay, and so when they make those different pots of money and that kind of stuff, that's how you adjust for inflation?
Well, yes, there's the different money types, and then also how you have those different buckets invested. You shouldn't have all your investments be the same thing. With the price of eggs these days, you don't want all of them in one basket. We don't want all of our investments in the same basket either. You want to have that diversified approach and make sure that you can hold up against different market volatility and then also different price points. So you can build, just like how we like to get a raise at work, you want to give yourself a raise in retirement as well.
Yeah, and that is possible to do. You just have to figure out how to do that with a little bit of help. Matt Landon was joining us today. Maybe you want to watch this again. It's going to be on our website in the To Finance Your Future part of our website. We'll be right back.